Hello and welcome to another MCO market update on FET. FETCH.AI, we can see here a break above the initial resistance zone. That is a first indication that a low has been established on the FET chart. You know that I haven't given up yet on the bullish potential for FET, but obviously this chart needed to give us some kind of confirmation that a low is in to be short-term bullish. Here on the larger time frame, I mean, other than a break above the trend line and break above initial Fibonacci resistance, we don't see much. The larger time frame is still valid and relevant, but we also want to take a look at the smaller time frame in a minute. But here on the larger time frame, I mean, all I can say is that the wave count itself remains unchanged. So you might remember from previous updates that this, as a wave 4, could be classed as complete. We just needed a reversal signal because the pullback was deeper than a wave 4 should normally be. Now, don't get me wrong, we're far away from confirming we've started wave 5, but it's definitely looking interesting. And I'm starting to lean towards a low might be in, but I don't think we have enough structure yet. But let's take a look at the smaller time frame together in a minute. But yeah, quick reminder, the fifth wave should still take us to $6.22 plus. And in the bearish scenario, the move down could easily be the yellow scenario. So we will talk about that a little bit further in future videos, because the risk that this is all part of a third wave to the downside, which should reach 6.9 cents, is quite high due to the depth of the decline. However, the move to the downside from the March high, so March last year, is a three-wave move. So it technically leaves the door open for higher prices. Yeah, with any three-wave move down, a corrective pullback basically, the door for higher prices remains open. Now, this is interesting now. This is the smaller time frame. Here again, you can see no wave count change. Now, I see this like a 5-wave move up. Okay, it's not the cleanest, and it does look like a diagonal pattern, but it is a possible 5-wave move up. Wave 1, wave 2, wave 3, wave 4, wave 5. So that's how I see this. This could change. This could extend so much, this fifth wave, that it starts to look like an ABC structure again. So that's what we now need to observe. We have to see where this fifth wave ends. And I can tell you that if the market... So let me change this. So if the market breaks above 63.4 cents, it's a little bit too long for a fifth wave. And especially if it then reaches the 100% extension, it will start to look like an ABC structure. So the ideal target is between 58.8 cents and 63.4 cents. So we'll see if we get there, or at least, do you understand the problem? So if the fifth wave is too long, it starts to look like an 3-wave A wave, a B wave pullback, and a C wave up. And that is not bullish. So that's what I'm tracking. Basically, if you're interested in, or if you're focusing on higher prices in your trading in the short term, yeah, the nearest key level is the last swing low here at 49.6 cents. And then we've got 44.4 cents, the last swing low, the larger degree swing low here. So we have 5 waves up. It would just be ideal if the fifth wave doesn't extend to the upside. And the Fibonacci support zone to watch at the moment, if we get a pullback now, then support should be between 38 cents and 46.4 cents. So this would be Fibonacci support. So let's assume 5 waves up could mean this is a larger degree wave 1. Okay, 5 waves in wave 1. If we then get a pullback, this would ideally be wave 2. And ideally, it doesn't break below 38 cents anymore. So to keep the bullish turnaround or reversal potential alive. That's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.